Good guys, welcome back to IREN Investing, and today we're going to talk about IREN. Because the market saw that 6 billion market stock offering headline and instantly freaked out. And honestly, I get it. Because let's stop pretending a 6 billion market stock offering is some tiny little paperwork update. It's not. That's a giant capital raising weapon if management used it badly. Shareholder can get diluted really hard. It's literally half of the market cap. But at the same time, acting like this is automatically means the business is broken is also lazy analysis. I think it's really unfair for IREN, and that's also one of the reasons I made a video today. The real question is simple. Is IREN management gonna setting up for a smart expansion with the money, or are they loading up the dilution candle because the build out is getting too expensive to afford? And the prospectus says the company can sell up to 6 billion of stock over time, but it also said it has no obligation to sell any specific amount, which means they can sell the stocks whenever they want when the market is open. So let's get into it. So here's how I want to frame this. We cannot look at IREN without looking at CoreWeave and Nebius. If you only look at the current numbers, IREN is not the leaders. That title goes to CoreWeave right now. If you want a company that is already showing serious AI cloud monetization with the real momentums, Nebius deserve a lot of respect too. But if you want a company that might be sitting on one of the most underrated hard asset position in the whole AI infrastructure race, that's where IREN gets interesting. I want to do a comparison between these three companies. Let's start with CoreWeave. CoreWeave is the current king of the scale, not for debate, and it's not a theory. Just look at their numbers. They did 5.1 billion in 2025 revenue. They end up the year with 66.8 billion of backlog. They had 43 data centers and over 850 megawatts of active power, plus about 3.1 gigawatts of contracted power. That is what leadership looks like in this competition. CoreWeave is ahead on revenue, backlog, customer reach, and platform depth. But here is the punch in the face and the catch. CoreWeave is also loaded with debt. The total indebtedness was 21.6 billion as of December 31st, 2025. And the customer concentration is real too. They highly depend on the Microsoft. About 67% of 2025 revenue comes from Microsoft. So yes, CoreWeave is the leader, but it is also the company where the market is basically saying, you better keep executing because this thing is built on speed, leverage, and giant customer commitments. Now let's talk about Nebius, because I think a lot of people still underestimate how real this company is becoming. Nebius report 227.7 million of fourth quarter revenue, and 214.2 million of that was core AI cloud revenue. That is a huge gap between IREN's current AI revenue and Nebius. Nebius also ended 2025 at 1.25 billion ARR, said it was basically sold out in fourth quarter, already has more than 2 gigawatts of contracted power, and now expected more than 3 gigawatts by the end of 2026. They've also delivered Microsoft and Meta capacity on time. That matters in this market. Execution is everything, especially in the data center business. It's literally related to all of their deals. And Nebius is not just a rent-sung GPU story. They keep talking about the platform. They had software, customer tool, full stack AI cloud, and expanding capability through product investment and acquisitions. So when I compare Nebius to IREN, I think Nebius is farther ahead in turning infrastructure into a recognized AI revenue and into something like looks more like a real cloud platform, not just a power and hardware story. So why do I like IREN? So now let's get to it. This is where things get really interesting, because on the surface, IREN looks smaller and earlier, and that's true. In the December quarter, AI cloud service revenue was only $17.3 million, so anybody valuing IREN like a fully mature AI cloud company is getting ahead of reality. It's not true, it's not a fact. The real attract point of the IREN is their power. The AI revenue base today is still small, but under the surface, IREN has something a lot of investors keep missing: real control over physical infrastructure. The company says it has more than 4.5 gigawatts of secure power. It says it owns and operates computing hardware, electrical infrastructure, data center, and freehold land. It had about 99,900 GPUs installed on order as of December 31st, 2025. And then they announced the purchase agreements for 50,000 plus NVIDIA B300 GPUs and taking the fleet to 150,000 GPUs. Management said that fleet could support more than 3.7 billion of AI cloud run rate revenue by the end of 2026. And there is Microsoft contract. IREN's filing says the Microsoft agreement is worth about 9.7 billion through 2031. spans 4 tranches target during 2026 and uses roughly 200 milliwatts of IT loaded at Childress. It also says 20% of each tranche is already prepaid. Before delivery, and that cash flow from the deal are expected to fund part of about 5.8 billion of the GPU. On top of that, Goldman Sachs and JP Morgan committed to underwrite about 3.6 billion of delayed draw financing tied to Microsoft build-up. It's a real validation from huge tech giant. So what's the real difference between these 3 companies? And here is a simple version. CoreWeave is winning on current scale. They are the biggest, the largest. The biggest deal with the Nvidia. Nebius is winning on the current AI monetization momentum. They have the best platform, they have the best tools to work with the data center. And IREN is winning on the pure hard asset angle. They have land, power, data center, and direct control. And I think that last part matters more than a lot of people realize. Because in AI infrastructure, the bottleneck is not just GPUs anymore. The bottleneck is time to compute. Can you actually get the power? Can you get the site? And can you build the data hall? Can you get the hardware online fast? IREN's whole pitch is that it's already spent years building that base, and which gives them a big advantage on that. Now let's hit the ugly part head on, the 6 billion market stock offering. And this is where bulls need to stop sugarcoating things. A 6 billion market stock offering is not automatically bullish. It is not some cute sign of confidence. It means the management wants the right to raise a massive amount of equity if it decides the opportunity is there. And if they use it recklessly, shareholders absolutely get smoked. The filing is very clear. This replaced the old 1 billion prospectus supplements under which IREN had already sold about 66.7 million shares for roughly 1 billion of gross proceeds. The new one allows up to 6 billion more from time to time, which is half of the market cap which I mentioned earlier. And this is exactly why the market reacted really bad. Because IREN also announced those 50,000 plus B300 GPU purchases, and the company said that in plus about 3.5 billion of additional capex expected in the second half of 2026. So investor like me look at that, just said, okay, you've got a giant expansion plan, and now you've opened another giant equity by God. So should I assume dilution is coming? And that is a really fair question to ask, because here's a part where I push back on the bears. The market offering is not the same thing as immediate 6 billion down. The filing literally said they may sell the shares from time to time and have no obligation to sell any specific amount. This is not management saying we are desperate. It's a management saying we want the maximum flexibility because AI infrastructure is really expensive. Demand is moving really fast, and we do not want to get caught underfunded. And that could be a smart move if the money goes into contracted high return assets. So my view is blunt. If IREN just used this market stock offering to fund some dream half contract projection and trust us expansion, that would be a really bad situation. So I assume the management have somehow figured a deal with some big company. And like I said, if IREN used it really selectively at a strong stock price to finance infrastructure that already has customer demand at attractive economics, that's smart capital allocation. And that's the whole game, not just the headline. The use of the headline. So can IREN actually lead this race in the future? Yes, I have confidence in them, but not in every category like I mentioned. I do not think IREN is the best bet to lead on cloud software depth in the near term. CoreWeave looks stronger there. Nebius also looks really more advanced on the platform besides IREN. But I do think IREN has a real shot to become one of the most important independent AI infrastructure owner if 3 things happen, and they could bring the most return compared to the CoreWeave and Nebius. First, they need to turn all that power into real signed contracts, not just on investor deck dreams. Their own material admit that 3.4 billion ARR target is not fully contracted, and the part of it depend on assumption around GPU deployment in British Columbia. Second, they need to prove they can keep delivering on time. The Microsoft deal matters a lot because it validates the platform and the company. But the filing also says Microsoft has termination rights if delivery milestones are missed after queue periods. So execution here is not optional. It is life or death for the bull case. Third, they need to show this is not just a one customer story. CoreWeave and Nebius both have broader public proof that major customers want what they're selling. For example, Nebius already signed a deal with the Microsoft and the Meta platform, and IREN needs more of that, more logos, more contracts, more evidence that this business can scale beyond one giant angle relationship. So here's my bottom line. IREN is the hard asset dark horse out of the three, especially they have a positive cash flow coming from the Bitcoin mining business they used to do. And that's why this stock is really interesting and complicated. Because if you are bullish on IREN, you are not really buying today's AI revenue. Today's AI revenue is still really small. You are buying the idea that in a world starved for power, size, and fast deployments, IREN's land and power base becomes instantly valuable. You are buying the conversion of the physical infrastructure into AI cash flow. If you're buying IREN, which means you trust the data center is necessary and the demand for it is keep getting bigger in the near future. But don't get it twisted. This is not a no-risk story. This is a company trying to jump from promising AI infrastructure owner to major AI platform, and that jump is really expensive. That is exactly why the 6 billion stock offering matters, and it is either a smart war chest or a warning sign that future dilution could get very real and really fast. I think the business is strong enough to take it seriously. I don't think it's a meme stock in the Reddit anymore. I do not think shareholders should blindly cheer for every financing move. So if you ask me in one sentence, why should I invest in IREN? CoreWeave is ahead of the game, Nebius is executing really fast, but IREN might have the most underrated power position in the whole group, and that gives it a real path to become a monster. If management stay disciplined, that's a big bet you bet on these dark horses. That's also the risk, and that's why this stock is worth watching. Thanks for watching this video. I'll see you next time.